all you small business owners out there, this is a very disturbing graph. Employees that quit and went to a new employer on average increased their earnings 9.7%. Employees that stayed, loyal employees that stayed with their current employer, lost the equivalent of 1.7% of earnings, of purchasing power, because their raise was not as high as the increase in inflation. And when employees quit and went somewhere else, not only did they have more than the increase in inflation, but they had 9.7% more than that. So significant. Now, here's a problem with that, is that the ratio of job openings to hires in all private sectors are at record highs. I mean, this goes back to the beginning of the century, beginning of 2000. And as you can see, the ratio of job openings to hire is about 165 job openings to number of people that are available to hire. Speaking of job openings, look at the unemployment level. The unemployment level is at, once again, century lows. And this blue line here are the job openings. And notice what we see, the trend here. All the way from the beginning of 2000 up until now, the red unemployment level was always higher than the blue job openings. So there was always more people unemployed than there were jobs available. And look what happened in 2018. It flipped, except for this COVID-19 timeframe here. But as you can see, the gap is bigger than it's ever been, where now we have a significant difference between the unemployment level and the job openings. Now, this 2018 timeframe is just about when the baby boomers began to retire. And so this is going to continue. And we need to be really mindful of that. And employees are recognizing that they can make more money elsewhere. And they also know that jobs are plentiful. So it is easy to quit and find another job. And once again, we're at near record highs with the rate of quits that we're seeing. This is not going to get any better. It is going to be hard to find good labor for a very long time. So what do we do about it? Well, it really starts here. It really starts, once again, it always starts with having timely, accurate financial statements. If you don't have timely, accurate financial statements, then garbage in, garbage out. You need to have timely, accurate financial statements so that you have good data. And then it allows you to use that information to just make better decisions for the business, to truly improve your margins, your profitability, your cash flow. Now, here's the top part of a profit and loss. Real basic, a real basic example here. We have sales or revenue of $1 million, and then we have the cost of goods sold, the direct cost associated with selling your product or service, direct material, direct labor, direct overhead, gives us our total cost of goods sold and our gross profit and the gross margin of 50.92, almost 51%. Now, again, this is the top part of the profit and loss statement. If you have it broken out this way, the power of being able to have this information, first of all, gross margin tells us so much, because if you have this data correct, then it gives you an idea of what am I truly receiving in profit for the product and or service that I'm selling. But once you have this opens up the door to now break it out by your product or service. So in this example, this company has two products, product A and product B. And notice now that it is broken out individually by product. So the $1 million is now $600,000 of sales for product A and $400,000 of sales of product B. And then the cost of goods sold is broken out. The gross profit is separate. And notice what happens. We now have a gross margin by product. So as a company, our gross margin was about 51%. But when you break it out by product or service, the individual item, notice that the margins are different. So why is this important? Well, in cost accounting, in accounting school, when we're in cost accounting, one of the things you learn is you want to max out the product with the most margin, because when you do that and you sell as much of the product with the most margin, you're going to end up with the most profit. You're going to end up with the most cash flow. So you always want to max that out. And then you also want to take this information, now that you have this, and you want to take it one step further. You want to break it out by unit. So we want to understand also our gross profit per unit. Now, because of the fact that we have our gross margin, we have that timely, accurate financial statement, and then we have the ability to break it out by product or service. And now that opens the door to break it out by unit. Notice what we have. Product A, $400. All the material, labor, and overhead costs, that amounts to $185 per unit. And that gives us a gross profit per unit for product A of $215. For product B sells at $300. Its cost of goods sold is $160, and we have a gross profit of $140. So once again, we have the 53%, almost 4% for product A and 46% gross profit for product B. Now, again, in a world where all resources are abundant, we want to max out the product with the most margin, max it out until we can sell no more, and then move on to the other product. And in this case, product A, every product A that we would sell, we would end up with $215 of gross profit per unit. And in product B, it'd be $140. So once again, we'd want to max out the sale of product A. But we are living in an environment with scarce resource. We are living in an environment where it's hard to find good labor. So we need to take this one step further. And that one step further is let's break it out now by labor hours. So when we take product A and we determine how many labor hours does it require to produce one product of product A, it's 1.5 hours. And in this example for product B, it's a half an hour. So now we have all the information to take that gross profit per unit and create a gross profit per labor hour per unit. So because product B takes a half an hour, product B, the gross profit per unit is $140, but it takes a half an hour. So in 1 hour, we can produce a gross profit of $280 per hour for product B. For product A, since it takes an hour and a half, the gross profit per labor hour is $143. Labor is scarce. We want to maximize product B. We just flip the narrative. We want to get the most out of our labor hours, so we want to sell as much of product B. See, this is the power of timely, accurate financial statements. This is the power of being able to break out your profit and loss properly to your gross profit, to understand your gross margin, to then break it down to the cost of the unit, and then break it down one step further to the gross profit per labor hour. This is very powerful because without having to add any additional labor, you can make small adjustments to your product mix, and you can make significant swings, percentage points, several percentage point swings to your gross margin and to your bottom line. Now, this can amount to tens of thousands and possibly hundreds of thousands of dollars of additional gross profit. And so many businesses are not doing this. Now, let me show you an example. Make this a little bit bigger. This is a company I'm working with, a client I'm working with. They sell, their primary business is hourly billing, but they also have classroom training, retail, and online self-training. Now, they have a total sales right now of about $2.5 million, and these are obviously they're broken out by the major revenue sources, and we have the separate gross profit per revenue source and gross margin. The hourly billing gross margin is 23%, classroom training is 54%, retail is 76%, and online self-training is about 91%. Now, if we break this down into items, the hourly rate, the labor rate for the billing, the hourly billing and the classroom training is about $50 an hour. They're highly specialized. They're harder to find. And retail and online self-training, that's basically just helping with the sales process, is a $22 an hour employee. The average number of hours it takes for the hourly billing is about an hour and a half. The classroom training is 2 hours, and now it's 2 hours because we have one teacher for 8 hours. On average, there's 4 students, so it's 2 hours per student. And then the retail and self-training, there's just a small portion of each individual's, the employee's time with each individual that purchases. So it's about 3-4 minutes per individual per customer. Now, the sales per unit, the hourly billing is $150. The classroom training is $250. Retail, the average sale is about $35, and the online self-training is $75 a membership. We break those costs out, and we come down to the same gross margin percentages per item as we did have as a total group, which is not a surprise. We have the 23% for hourly billing, 54% for classroom training, 76% for retail, and 90% for online self-training. But again, we have a scarce resource, labor hours. So if we break it out by labor hours, the time it takes for hourly billing is 1.5 hours. So the gross profit per labor hour is about $23.33. For classroom training, it's $68. For retail, it's $538. And for online self-training, it's $1,358. Now, again, we're focusing on the gross profit per labor hour. So the items that take the least amount of labor, there's the greatest potential of increasing the gross profit per labor hour if you focus on them. So when we're in an environment where it's hard to find good people, good skilled people, we want to focus our strategy on what are the areas of the business where we can increase the sales, increase the margin without increasing the number of people that we have. And where is that? It's very easily exposed when you do this exercise. Online self-training, retail, classroom training. Those are the ones. Now, take it a step further. Ask the client how many items sold last year. So hourly billing, 10,500 hours, 10,500 units. Classroom training, 1,053 participants. So again, that average of 4 per day. Retail, about 8,000 units sold. And online self-training, about 6,200 memberships. And if you take those units sold and you multiply it by the sale per unit, you come back to the total sales of that almost 2.6 million and the total gross profit of 1.1 million. So let's take it one step further. So I asked the client, how much additional sales unit sales potential is there with the existing labor? So without having to hire anybody else, what can they do? So in the classroom training, they have on average 4, but they can fit 8. So they can essentially double the number of participants if they focus, if they put a strategy together to market it, to sell it. Retail, they've never pushed retail before. They are now focused on selling retail, and they're going to take their 8,000 from last year, and they believe they're going to be able to sell 12,000 units. So an additional 4,000 units. And online self-training, they're going to go from 6,200 and they're going to bring it up to 8,200. That's an additional 2,000 memberships. And if you take those units and you multiply it by the gross profit of each unit, the potential here for classroom training, if they get the 1,053 more students, that's 1,000. That's 143, almost $144,000 of additional gross profit. Retail, an additional 107,000, and online self-training, an additional 135,000. That's $387,000 of gross profit, or an increase in gross profit of almost 34% without hiring an additional employee. That's what's being left on the table. That's the potential of what is being left on the table. This is happening everywhere. Every company has this potential, and they just don't know it. And if you're not breaking these out, if you don't have timely, accurate financial statements, if you're not breaking out your gross profit, gross margin percentage, if you're not breaking them out by your main revenue source categories and understanding what those gross profit and gross margin are, then you are leaving tens of thousands, if not hundreds of thousands of dollars on the table. Now, you can use this process and give it a try yourself. If you want to accelerate that, give me a call. Send me an email, tony@yenllc.com. Leave me a comment. I'd be glad for that. But I also want to prove it. So I want to give an opportunity to one company out there. If there's a business out there that doesn't have timely, accurate financial statements, that is not tracking any of this, and they have sales of somewhere between $3 and $10 million, if they're willing to volunteer their numbers and to allow for video recording and other recordings, then I will come in and I will show them so that we can show everybody else how to do it and how easy it is and how much money you can save. Because again, this $387,000 that you see here, this added gross profit, most of this goes right to the bottom line, right to your pocket. So if you're interested, if you're a business with $3 to $10 million and you're willing to volunteer sharing some of your numbers and also real-time video, then give me a call. Leave me a comment. Also, if you like this, please, if you're watching this on YouTube, please like it. Please share it. It certainly helps me out, and please subscribe. Thanks again. Have a great day. Talk to you soon. And look at that. I didn't have my picture on there this whole time. I guess it doesn't matter. Have a great day. Talk to you soon.